Knowing when to buy a London property has always been difficult, but now more than ever, the question seems to be crucial. For example, international buyers are returning to prime markets but remain below COVID levels. Asking price discounts in London are widening. And the Knight Frank, one of the major agents in prime London, says that March was drama-free for the London property market. The prime London property market is showing signs of returning to pre-pandemic levels of activity. For example, if we look at data for February for units sold, we can see it's down by 33% February this year compared to the same time last year. And yet, if we compare that to the average of pre-pandemic levels, 2017 to 2019, it's down only by 9%. That being said, if we look at properties under offer, which is a clear indicator of sales, of course, it's actually up by 10% compared to the same average of pre-pandemic. So let's look at the stock levels. The number of new instructions continues to rise, 14% higher than February last year and 23.6% higher than before the pandemic. And it's a similar story for prices across prime London. In fact, if we look at indices such as Nationwide, across the nation, we can see that price growth has been pretty similar to the rest of the country. However, if we look at the price growth from 2015, when the stamp duty hit the UK, but especially affected the prime London market on the upper end, we can see that there's not been so much price growth in the prime London area and the upper price bracket. Even the recent boom of 2020 to 2021, while having bigger impact on activity at the top end, boosted prices more in the lower value markets. As such, the relative underperformance in prices relative to the national average has continued, with prime London prices in February just 1.7% above their pre-pandemic average and still 5% below their 2015 peak. And of course, there are multiple reasons for the weak performance of London house prices. However, taxation by far is going to be the major factor as to why it's affected prices over the course of the last 7-8 years. And it's clear to see on this annual change in house prices growth. 2015, that dropped down and it continues to drop until finally, sort of around about the pandemic, it starts to climb slightly with regards to price growth. And if you find this London property market data helpful, hit that like button because it really helps me out in pushing more of these videos out there to people just like you. So the national housing market clearly weakened after the mini budget chaos, and of course prime London is no exception. That, combined with the increased interest rates which continue to happen today, of course has had an effect on pricing in prime London. Headline measure of achieved prices in prime London are only down by 2.8% over the last year. However, it's the discount to asking price that really highlights how pricing reality has changed relative to expectations over the last few months. So the average discount to asking prices across prime London increased over the years, certainly coming up towards the pandemic. So with the weakening of the market, but also the prices falling, it eventually hit the biggest discount since the financial crisis. And this happened probably around about 2019 in February. Around about 12.8%, if I'm not mistaken, of discount. The market then rebounded following the pandemic, and this led to a gradual narrowing in the discount, with the low of 4.7% recorded in July last year. Since then, the discount has widened again, and February stood at 8.4%. This suggests that sellers are having to be much more realistic about pricing if they want to transact in this market. As you can see in this prime London average discount to asking price graph, you can see a huge drop in February 2009, and then again there's a huge one back in 2023, February. And the fact that the prime London property market changes so rapidly absolutely means you should subscribe to this channel so you don't miss any of our updates. It's no secret that the longer a property is on the market and it doesn't sell, the bigger the discount we see on these properties further down the line. So here's a tip for any sellers out there. Make sure you get the pricing right and realistic the first time around, because once you lose that momentum of the first 6 to 8 weeks of a property on the market, it's very challenging to get that back. So in September last year, we saw average discount to asking price of properties that sold under 3 months of around about 1.7%. Now in contrast to this, properties that sold between 6 and 12 months had a whopping 7%, above 7% discount. So there's a huge difference there. The importance of getting it right the very first time in terms of pricing. So looking at the current discounts for homes selling under 3 months is now 3.5%, while the discount for the selling in 6 to 12 months is now 9.6%. So let's dive into the monthly prime data for February 2023. Annual change achieved prices down by 2.8%, properties sold down by 32%, and new instructions down by 14%. If we look at the average pre-pandemic, we're looking at achieved prices 1.7% up, properties sold down by 9%, and new instructions up by 23%. And if you're an overseas buyer or investor in London, make sure you subscribe and look out for our series for foreign buyers in London coming soon. And that is a wrap from me for the Prime London property market. And as ever, if there's any questions you have, please reach out to myself or my team.